Why are home prices still going up? I get this question all the time, and so many people out there predicted prices to fall in 2022, 2023, now 2024. And sometimes they have good reason, and other times they just say it's not sustainable or what goes up must come down. And here we are continuing to see things go up. So, we're going to talk about why prices are still going up. And let's look at a few articles that are sharing where prices are at. So, starting with Mortgage News Daily, home prices apparently don't care about high rates. This is talking about the Case-Shiller Home Price Index that just recently came out. Keep in mind, the Case-Shiller Home Price Index is delayed by about 3 months. So it's not the most recent numbers as far as home prices go, but it does show the trend that we've been seeing most recently. So a non-seasonally adjusted 6.4% annual gain in February. That's compared to a 6% rise the previous month. Also, the 10 city and 20 city composites rose 8% and 7.3% respectively, up from 7.4% and 6.6% in January. So overall, we've seen those home price increases. They go on to call out a few major cities. So San Diego has the highest year-over-year appreciation with 11.4%. Chicago, Detroit being some other major cities, almost 9% growth there. And Portland is at the bottom with 2.2% growth. This article from Redfin is saying for the first time in nearly 2 years, there's no major American metro where home prices are falling. They're getting a lot of that information from the Case-Shiller Home Price Index as well. But they're saying that nationwide, the median sales price rose to a near record $383,188, up 4.8% year over year. That's in combination with mortgage rates increasing, right? So as rates have increased, that has impacted the mortgage payment for a home buyer. And the median monthly housing payment is now at a new record of $2,890. That's up 15% year over year. So the argument of this is just not sustainable, I fully understand that, yet we continue to see home prices go up even with rates climbing. Now, a few weeks ago, I talked about how the Cromford Report was reporting on the sales price per square foot in the Phoenix area and that we were about to hit an all-time high if it went a little bit higher. And we did. We hit this all-time high, $308.95. That is the monthly average sales price per square foot. And what the Cromford Report is saying about this is that, there's a lot of people anticipating an imminent price drop and have said that year over year, kind of like what I was mentioning. But the big thing that is holding back any sort of crash or price fall at this point is that we have constrained supply throughout the US and specifically in the Phoenix area as well. So that's really what is keeping our prices where they're at today and continuing to increase them. We really need an oversupply in order for home prices to fall. Specifically, what they say is that the market sees low volumes when demand is weak, but to get prices to come down, you need excess supply and desperate sellers. And at this point, we don't have excess supply. So let's take a look at where we're at with our listings on the market right now. Here we are, this blue line right here, about 17,000. And, it does look higher than the last few years, but as I always say, if this is your first time looking at this, the last few years are not normal years. If we go back to 2018, 2017, 2016, you'll see that inventory was always higher than where we're at today and much higher than we were in 2021, 2022. You really have to go back to a year like 2006, 2007 to see where inventory was much higher than where we're at today. And this is when we saw home prices come down because we truly had an oversupply of homes on the market and we had very little to no demand at all. Of course, today we're seeing lower demand because of the affordability concerns, because of mortgage rates, but we still don't have the supply that is allowing us to see home prices go, where sellers have so much competition on the market that they have to decrease their home price in order to get it sold. It's so interesting to look at the supply differences from 2006 through 2008 and seeing where we were at the peak here around 57,000 homes on the market in the Phoenix metro area, that is pretty jarring. And obviously, we have a very long way to go if we're going to get anywhere near where we were during those years. As I said, this restriction in supply is not just here in the Phoenix area. Nationally, we have a housing gap of 6.5 million homes. This is according to research done by Realtor.com. They're saying that the U.S. is still short 6.5 million single-family homes compared to the number of families starting new households. So while there are a lot of economic factors out there and question marks about what could happen in the future, the main reason why home prices continue to go up is because we have more demand than we have supply, regardless of where these mortgage rates are headed. So let's talk about what's going on in the economy. Last week, the Fed met and they didn't really do much. They said another rate hike is unlikely. They held rates steady where they're at currently. Jerome Powell talked about his view on the timing of rate cuts and basically said that it's unclear when they will get to that point. They're really looking at the data. He was asked directly if he still agrees that they project that there's 3 rate cuts in 2024, and he didn't respond with a direct answer on that. So overall, it was pretty good news that we didn't see, of course, a rate hike. We didn't have any negative or concerning commentary from Jerome Powell, and they just want to continue to watch the data, watch inflation, and they think they're on the right path to getting inflation to that 2% target. He said that so far the data has not given them greater confidence. In particular, the readings on inflation have come in above expectations. It might take longer than previously expected for them to feel confident enough to cut rates. So that's where we're at with the Fed meeting last week. And then on Friday, we got the jobs report, which came out weaker than expected. And that ended up being good news for mortgage rates. Mortgage rates stayed high last week in that 7% range, actually increased for the 5th week in a row. We have not seen much change in rates, but when that jobs report came out on Friday, that was some good news for mortgage rates. They declined slightly on that news, which was a bit of a relief, but nothing significant. So this is where we're at with rates right now. And at this point, it doesn't seem like there is any big market moving information that's going to come into play to change rates. Now, as we talked about where rates are at, let's assume 7.22%, and then with median home prices being high 300s throughout the nation. In the Phoenix area, we're in the mid 400s. That mortgage payment can be relatively high. So what has been happening lately? Well, reports have come in that the ARM loan share rises as borrowers seek affordability. So this is an adjustable rate mortgage. If you're not familiar with that, it means that usually your rate is a lower rate to get into the loan, and then after 5 years or however they have it set up, that rate adjusts. So it's going to be market dependent at that time. And so it can be a little bit riskier in that sense because you don't know where you're going to be at in 5 years or what rates will be. However, you can get into a loan at a lower rate than what's out there and offered today on that 30-year fixed rate. So they're saying that one notable trend is that ARM share has reached its highest level for the year at 7.8%. Prospective homebuyers are looking for ways to improve affordability, and switching to an ARM is one means of doing that, with ARM rates in the mid 6% range for loans with an initial fixed period of 5 years. So that's one option for you as a home buyer. Of course, you want to research that, make sure you're comfortable with it, make sure you're prepared for that change in 5 years or whatever that looks like, and speak with your lender thoroughly about that process. But it's interesting to see that that's one thing that buyers are starting to explore again, that's beginning to come back up, as it wasn't quite as common over the last few years when rates were much lower. And by the way, if any of this is helpful to you, make sure to hit that like button and consider subscribing so you can join me every Tuesday with these market updates. So let's talk supply and demand. So the Cromford Market Index, I look at this every week. The reason I look at it is because it is measuring supply and demand in our market. And at the end of the day, supply and demand are really what is going to determine prices. If we have more supply than we have demand, as we talked about, then we see see home prices go down. If we have more demand than supply, then home prices continue to increase. And right now, overall, in the Phoenix metro area, we're in somewhat of a balanced market. It depends on some of these particular cities that see more demand and less supply. Therefore, we see greater price increases than other cities. And the opposite is true in some cities where there's a lot of new construction. You're seeing more supply and less demand. But overall, when we look at the larger picture, demand is at 80. Demand is still low, but it's only 20% below normal, which isn't too crazy. Our supply is also low, but again, not as low as it has been in the past. That's about 28% below normal. And so at this point, we've got lower supply than we have demand. Now, if both supply and demand came to, let's say, 80, if supply increases, then we'll truly be in a balanced market where supply is meeting demand, and we will only see price increases that follow the rate of inflation. As of right now, we're seeing price increases that are higher than the rate of inflation because there is that constrained supply. So if we look at every major city, as I mentioned, there are changes depending on what city you're in. So Chandler is in a seller's market. There is a lower amount of supply in Chandler, and it is a very desirable place to live. So that demand is exceeding supply there. And that's why we're seeing a higher index overall, meaning we're in a seller's market. And then you have somewhere like Buckeye where there is a lot of new construction there. So buyers have a lot of options, whether it's resale or new construction, and the demand there is just not outweighing that supply. Everything else throughout, really the rule is anything between 90 to 110 is considered a balanced market. So that's going to be Surprise, and Goodyear's kind of on the cusp of that. Anything over 110 is the seller's market, which is the majority of these major cities throughout the Phoenix area. And then anything under 90 is a buyer's market. Cape Creek, Queen Creek, Maricopa, and Buckeye, all technically in a buyer's market. Now, the Cromford report also looks at the average change month over month of all of these cities combined. We saw a change in a positive direction of 1.7%. The week before, it was 1.4%. Very slight change, but still showing that overall these numbers are increasing just a little bit. Now, if you've been considering selling your house and you want to capitalize on the fact that home prices are continuing to increase, check the description below. I have a link where you can check your instant home value and see if that even hits the mark of what you're looking for. In that link, I also have some great resources for home buyers as well. So make sure to check that out. I'll be back next Tuesday for another market update.